How you guys doing? I hope you're doing fine. I hope you're doing wonderful. Please, before I start, I would like you to do me a favor and push like, share, subscribe so the algo of YouTube would suggest me to other people. If you agree with my analysis, even if you don't agree with it, just try to have some knowledge exchange with somebody that disagree with you. Good deal. So this is a presentation about the equity market via the Dow Industrial, via this S&P 500. So here I'm going to start with the put to call and its inverse relationship with the price action of the equity market. Today we have 34% price increase in the put to call, which is really significant. From 2 days at least, I think almost from 35, almost 50 something percent. So what's bullish about the put to call here is the MACD bullish crossover and the bullish crossover in the stochastic. Sometimes this is very bullish for the equity put to call and bearish for the equity market. I discovered throughout the years a signal I called disco signal, which is the moving averages of the 20 and a 50-day moving average for the equity put to call. I noticed for years and years and years, every time that the 20-day moving average get closer or bullishly cross over the 50-day moving average, the put to call goes up and the market goes down, except since November of 2020. It happened before. See, it was prior to the Biden victory in the previous election. So the price action of the equity market went down before the bullish crossover. So it crossed over, then it bearishly crossed over, and after that it was not very obvious until today. There's a bullish crossover between the 20 and the 50 right here. This is the 20 and this is the 50. Except this time, 100% of the time, when this happens, bad things happen to the stock markets. Okay, you could pause and look at it in your own time. You can test it in your own time. It's the equity put to call, 20-day moving average and the 50-day moving average. I've never read this before. I've never heard anybody talk about it. So I called it a disco signal. And the disco signal is on now on the equity put to call. Good deal. So let's talk about the Dow Industrial. What's bearish today? It's the first time since November that the price action comfortably closes below the 20-day moving average in the dots right here. Okay? So it's the first time. So this is a bearish development. So what happened yesterday? We had in the candle, in the Japanese candles, a bearish engulfing. And this is the confirmation of the bearish engulfing. So, in addition to that, we have a bearish divergence that has been taking place since November 9th, 2020 till today. And it's with the MACD and the stochastic. And stochastic did the bearish crossover. And this is historically very reliable. So how low the Dow will go down, I really don't know, but I'm not going to touch that. This is really any very conservative technician will not touch the equity market with these 2-day action right here. So let's look at, this is another discussion about previous action that the same condition took place. So we have bearish divergence and a bearish confirmation, which is a bearish crossover in the MACD, and the stochastic back together. Last time this happened. And this time the signal was not very obvious. It was obvious here. Before that, this is a bearish crossover that came with bearish crossover and stochastic. And this is what happened. You can pause and look. So bearish divergence, then bearish crossover, then price retracement. So it's very obvious. Good deal. So this is the daily time frame in the Dow Industrial. Let's look at the weekly time frame. It's even more obvious, and it gives us this price action since 2016. You could pause and look. If history repeats itself, price would retrace. So, bearish divergence. Even the weekly time frame is more reliable. Bearish crossover in the MACD with the stochastic. Last time before the Biden victory, it gave us it went down from the signal at say 20,600 till the low was almost 26,500. So almost 10% that signal gave us right here. Okay. Same thing almost every time. So even the bearish development is extremely obvious in the weekly time frame. I want to pause so you can look at it. I'm trying to make everybody look at the stuff. So am I convinced of this bearish development in the weekly time frame? Why not? Really, why not? If it happened in the past, it might happen in the future. Why should I be bullish now? So I'm not being an extremist here, right? It's very obvious. And I did this in LinkedIn, think last week. Yeah. This action was not here. And this is my finding. You can pause and look. The price structure of this time that started in late 2018, it gave us this V-shaped recovery till the beginning of 2020 resulted in this flush. So V-shape, flush. Now we have V-shape. We don't have the flush yet. So it's almost an identical price structure from 2018 to 2020. And now we have the same. We have bearish divergence in the RSI. It's obvious. High, higher high, high, lower high, high, higher high, high, lower high. We have bearish Harami reversal candle. So this what I was talking about. White candle or green, whatever you want to call it. Then a red inside day, they call it in the Western technical analysis and Japanese candles. Bearish Harami. So let's look what happened here. White candle, bearish Harami. Confirmation. Even though the confirmation here was more severe, nevertheless, the price structure is bearish. Okay? So I could add another finding, confirmation of this bearish structure. Okay? And also at that time, the put to call, the equity put to call here was almost 43, 40 something. And it was the same last week. This is really interesting too. And let me look at the okay. Let me look at the equity put to call. Maybe I could do it later. Okay, so the equity put to call now, it went up to 63. Last week it was 35. Okay. I think it was 43 at the maybe 35 is the beginning of this week. So it was a 43. So it went up all the way to 63. Okay? So conclusion, a sharp increase in the put to call came with bullish crossover in the MACD and stochastic, which indicates more upside. Very tested signal that I call the disco signal that worked almost 97% of the time in the last 10 years. Sharp sell-off that comes after a bullish crossover between the 20 and 50-day moving average and the equity put to call. Bearish development in daily time frame for the Dow, and also here for the Dow, and the weekly too, and the S&P. My finding, I might do individual stocks tomorrow. I will discuss maybe Apple, Facebook, whatever. If you want me to do this stuff, say something in the comment and I'll do it. Please like if you like, subscribe, share if you want more of these presentations. I used to do it every day and I did not receive enough attention. That's why I stopped, and I'm doing it weekly. If you want me to do it more often, please like and subscribe. And please do remember, the disco is forever!